Can someone else pay my mortgage? Is that legal? You know, there's a lot of creative ways to afford a home these days. Gift money from family members, concessions from the seller, buying down the interest rate, putting down a larger down payment so your loan amount is smaller. But house hacking might be one of the most interesting ways to have somebody else pay your mortgage payment and help you build real wealth. But first, what is house hacking and how does it work? You know, house hacking is finding a way to generate income from your home. Now, traditionally, house hacking involved buying a multi-unit property. Think like a duplex. You buy the whole duplex, you live in one side, you rent out the other side, and those tenants would literally be paying your mortgage payment while you built up equity and maintained the property. Now, in today's market, that could be renting out a studio apartment over your garage. Could be renting out that mother-in-law setup in your walkout basement that you're not using. Or it could simply be renting out the extra bedrooms in your house that you no longer need. What are the pros of house hacking? You know, not only does house hacking have years of practical use behind it, but it can, number one, help you cover your monthly housing costs and help you generate income, which means you could build more equity and pay off your mortgage faster. It can also help you qualify for low down payment loans reserved only for primary residences, making financing your home purchase cheaper than buying a rental outright, because it's your home and you're living there. And then on top of that, you may enjoy having company and not feeling so isolated and alone if you enjoy your tenants' company. Or you could rent to friends and family members if you get along with them. And then lastly, it's an easy way to slowly dip your toes into the real estate investing world and learn the ins and outs of being a landlord. What are some of the cons with house hacking? Well, you know, being a landlord comes with legal and financial responsibilities that homeownership doesn't. And additionally, house hacking can carry financial risks if you can't make the mortgage payment if the tenant fails to pay. Then there's also wear and tear. Think about it. With more people living in your home, things may wear out quicker, and the home may need more upkeep and maintenance than it would if you simply lived there alone. And finally, there's that lack of privacy that comes along with sharing your home, as well as potential conflict with your tenants, especially if they don't match your personality type. How can you house hack successfully? Well, familiarize yourself with the obligations for short and long-term rentals and what the legal and financial responsibilities are for being a landlord. And then have a system in place to screen all those tenants. Have a budget established that allows you to afford the home alone for a few months if there's some gaps in that rental income. And then get familiar with leases and make sure the one you put in place covers what's important to you and legal for the living arrangement you envision. So how do you finance a house hacking property? You know, residential loans are still an option as long as you live full-time on the property. But loan programs vary, so reach out to your trusted lender if you'd like to discuss your options. I've got some great ones if you need one. With the right preparation, house hacking can provide savings and opportunities for homeowners, but you know, it's not for everybody. So let's chat about your goals so we can find your best path to home ownership. Hi, my name's Peggy Dursthoff with HomeSmart here in Highlands Ranch, Colorado, and I focus on suburban living. It's a great place to house hack. If you like this video, take a look at this one over here where I discuss whether you should buy now or wait and the 5 questions you should ask yourself to make sure that buying now is right for you. Thanks so much for watching, and I'll see you next week.